Yes, a very good afternoon to all of you. Right, so let's look into the amendments for the November 22 exams. There are the amendments in the chapter of the Audit Committee and Corporate Governance, that is the SEBI LODR. Right, prior to this attempt, there were some changes which happened in the statement of peer review. Right, the revised statement of peer review was issued, and then that particular attempt, there was an entire integrated case study of 10 marks which had come regarding the peer review. So maybe on similar lines as in this particular attempt, we see the amendments in the chapter of the SEBI LODR. There could be questions, right? Case studies also, MCQs also regarding this particular chapter. And apart from that, obviously coming in the theory part of the paper, right? So getting into the discussion of the amendments, this is how the amendments have been given in the November 22 RTP. And based on that, we have these audit highlight notes over there, which you can also find on the Telegram channel. Right, so first amendment over there is regarding the audit committee. So it's like not first one is not like more of an amendment, it's more of a clarification like. Right, we already know regarding that under SEBI LODR, they want talk about the composition of the board of directors. Right, that minimum 50% should be non-executive directors. Right, then at least one woman director, top 1,000 listed entities, at least one independent woman director, top 2,000 listed entities need to have minimum 6 directors. Then if the company is having a chairperson who is non-executive but who is regular but not a promoter or not related to the promoters, then in this combination of NRNP, at least 1/3 independent directors. And in all other cases, whether it's having outstanding SR and all other cases, it says at least 1/2 independent director. Right, we are also going to look into the definition of independent director, right? Little bit of change over there. And then it says if a person whose age is more than 75 years, if such a person you want to appoint as a director in the company, then a special resolution is required to be passed. Right, so one in the chapter of SEBI LODR, we have some discussion regarding the composition of the board of directors. Right, then after that we talk about these 4 committees over there. The first committee being the audit committee. Then after that we also have the stakeholders relationship committee, then the risk management committee, and the last one is the nomination and the remuneration committee. Right, so audit committee, stakeholders relationship committee, then the risk management committee, and also the nomination remuneration committee. Right, for each of these committees, one, we need to know what is the constitution of these committees, right? That how many members and what is the constitution, how many independent directors, who should be the chairperson, and so. Then after that, we need to know that how many meetings of these committee, right? So like audit committee, we know at least 4 times in a year. Stakeholders relationship committee and nomination remuneration committee at least once in a year. And risk management committee is at least twice in a year, right? With a time gap of not more than 180 days, right? So we have the meetings and the quorum for their meeting. And very important discussion for each one of them is regarding the role of the committee. Like what is the role of the audit committee? What is the role of the SRC, the stakeholders relationship committee, the risk management committee, and also the nomination remuneration committee, right? So right now, anyways, we are looking into the amendments regarding the audit committee, right? So basically, what do we know regarding the audit committee? There have to be minimum 3 directors, right? Minimum 3 directors in the audit committee. And then what does it say? At least 2/3 shall be the independent directors, right? So we are talking about the constitution of the audit committee, which says minimum 3 directors, at least 2/3 shall be the independent directors. If the company is having the outstanding superior right equity shares, then all the directors have to be the independent directors. All members of the committee shall be financially literate, and at least one should be having the financial expertise, right? At least one shall be having the financial expertise, right? Then the chairperson of this committee, he shall be an independent director, and he shall also be present at the AGM to answer the shareholder query, right? Present at the AGM to answer the shareholder query, and the company secretary shall act as a secretary to this committee. Anyways, coming to the point, where is the amendment, right? So we always know that minimum 3 directors and 2/3 shall be independent directors. Now before that word 2/3, they have added the word at least over there, right? So it's more of a clarification that at least 2/3 shall be the independent directors, right? 2/3 of the members of the audit committee shall be independent directors. And we already know, in case of a listed entity having the outstanding superior right equity shares, all the members of the audit committee have to be the independent directors, right? So if I look into the RTP number 22, what does it say? The audit committee will have minimum 3 directors as members. At least 2/3 of the members shall be the independent directors, right? So this word at least, insertion of the word at least before the word 2/3 in point number 1, right? So that covers our amendment number 1, right? Then after that, when we talk about the audit committee, regarding audit committee 1, we have the provisions regarding the constitution of the audit committee. Then after that, we have the points regarding the meetings and the quorum of the audit committee. Then the power regarding the powers is the point regarding the powers of the audit committee. Then the provision regarding the role of audit committee, in which we literally have like 22 points over there in the role of audit committee. There we have a retail question also. Okay, what is the role of the audit committee vis-a-vis the review of financial statements? That the audit committee will review with the management the financial statements before submission to the board, right? With primary focus on the matters to be included in the DRS, the matters regarding change in accounting policies, any major accounting entries, right? Any accounting adjustments out of the audit findings, right? Then modifications in the draft audit report, the related party transactions, and the listing and other regulatory requirement, right? So that's one of the questions which we have under the role of the audit committee. And one of the super important question for the exam is regarding the mandatory areas of review by the audit committee. And this question is also called as the review of information by the audit committee, right? The review of information by the audit committee, right? So 5 to 6 times a question has already come in the exam, either as a direct question or a case study regarding the mandatory areas of review, or also called as the review of information by the audit committee, right? So what are the mandatory areas of review by audit committee? That is audit committee members, when you come for the audit committee meeting, these are the mandatory areas which you need to review. I hope all of you are listening to me. Right, these are the mandatory areas of review by the audit committee, and we have all the three letters over there, right? What are the three words over there? One, the contents of the MD and A, that is the management discussion and analysis. Then there is the point over there regarding the statement of significant related party transaction. Then the letter of weakness. What is this LOW? The letter of weakness, or the management letter, which is issued by the statutory auditor. So that is actually something as per SA 265, right? Communicating deficiencies in internal control. Then the internal auditor's report, okay, not independent auditor's report. This is the internal auditor's report, right? Then the appointment, removal, and the terms of remuneration of the chief internal auditor, right? So the CIA, that is the chief internal auditor, and the SOD, that is the statement of deviations of the fund, right? Funds being utilized other than the purpose for which they were to be used, okay, right? So these were the contents of the MD and A. Now what are the contents of the MD and A? All points constant, except for that this point relating to the statement of significant related party transactions is no longer there in the mandatory areas of review by the audit committee, right? So it says deletion of information on statement of significant related party transaction submitted by management under the mandatory review of information by audit committee, right? So earlier we had these 6 points in the mandatory areas of review by audit committee, but now we only have the 5 points over there. Point number 1, contents of the MD and A, that is the management discussion and analysis, right? We have 10 points of 10 contents under the MD and A. Then the letter of weakness being issued by the auditor, then the internal auditor's report, then the state appointment, removal, and terms of remuneration of the chief internal auditor, and the statement of deviations, right? And the statement of deviations, okay, right? So again, if you look at it at the audit highlights, right, we've given over here the MD and A, the management letter or the letter of internal control weakness issued by the statutory auditor, then the internal audit report relating to internal control weakness, right? Then appointment, removal, and terms of remuneration of the chief internal auditor shall be subject to review by the audit committee, and the SOD, that is the statement of deviation, quarterly statement of deviations, including report of any monitoring agency, right, if it has been appointed, and annual statement of funds utilized for those other than which has been stated in the prospectus, right? And this point of statement of significant related party transactions has now been deleted, right? That point has been deleted, right? So that's the amendment number 2. Okay, right. Then earlier there was a provision, that the chairperson of the top 500 listed entities shall be a non-executive director and not relating to the managing director or the CEO of the company. It says this provision has been done away with, right? That the top 500 listed entities, what does it say? The chairperson has to be a non-executive director and not relating to the managing director or the CEO of the company. So deletion of the point, right? Chairperson of the board of top 500 has to be non-executive and not related to the managing director or the CEO of the company, right? So non-executive and not relating to managing director, CEO, that point has been deleted, right? Just for additional clarification over there, instead of that point, now what is the requirement over there? It says you may have a separate post, right? The listed entity may appoint, right? So now it's not mandatory, it's like may appoint. What has been deleted is that the top 500 listed entities chairperson shall be non-executive director and not related to managing director or the CEO of the company. That point has been deleted. What is the new addition as such over there? The listed entity may appoint separate persons to the post of chairperson, managing director, CEO in such a manner that the chairperson again shall not be a non-executive director and not related to the managing director or the CEO, right? So rather from mandatory, now they have made it recommendatory over there, right? Separate post for the chief executive officer, for the managing director and the chairperson of the company in such a manner that the chairperson shall be a non-executive director and not related to the managing director or the CEO. Right now it doesn't say over your 500,000, 200, nothing like that. Just simply says that there could be the separate posts, right? Simply says that there could be the separate posts. Okay, right? So that is the amendment number 3. Right, next, coming to the next one over there, which is regarding the verification regarding the composition of the board. It says once a person has been appointed or reappointed as the director of the company, the approval of the shareholders is required to be taken at the next general meeting or within a time period of 3 months from the date of appointment, whichever is earlier, right? So once the director of a company has been appointed or reappointed, director or a manager, the approval of the shareholders is required to be taken when? Next general meeting or within a time period of 3 months from the date of appointment, whichever is early year, right? So now approval of shareholders is required once a person is appointed as a director or a manager of the company. When the approval of the shareholders is to be taken, it is to be taken by the next general meeting or 3 months, whichever is early year, right? Next general meeting or 3 months, whichever is early year. However, if such a person is to be appointed as the director in the company who was earlier rejected by the shareholders, then it says such a person, we had already rejected him, still you want to appoint him as the director of the company, then it says such an appointment can be done only with the prior approval of the shareholders. Right, so normally any person appointed, then the approval of the shareholders to be taken within 3 months or next board meeting, whichever is earlier. But if the company wants to appoint such a person as the director of the company who was earlier rejected by the shareholders, then in that case it says the prior approval of the shareholders would be required. And obviously for the notice for the meeting, you'll be sending that this particular director who we had earlier rejected, now we again propose him to be appointed as a director in the company. It says the notice should specify, right, the detailed explanation and justification of the nomination remuneration committee. Okay, why such a person, he's earlier rejected, but still why you insist, that he should only be appointed as a director in the company. Provided further that the statement referred to in section 102 annexed to the notice to the shareholder for considering the appointment or reappointment of such a person earlier rejected by the shareholder shall contain the detailed explanation and justification by the NRC, that is the Nomination and Remuneration Committee, and of the board for recommending such a person for appointment or reappointment. Okay, right? So that's the provision change over there regarding the composition of the board. One, what does it say? Once a person has been appointed, within 3 months or next general meeting, whichever is earlier, the approval of shareholders is to be taken. So within 3 months time. But in case if such a person is to be appointed who was earlier rejected, then the prior approval of the shareholders is required. And the notice to the shareholders regarding the appointment, reappointment, it should give the detailed explanation and justification by the Nomination Remuneration Committee and the Board of Directors. Right? Clear to everyone? Are you listening to me? Yes, are you listening to me? Wonderful, right? So that's verification regarding composition of the board, right? So hand in hand, like I'm going through the RTP number 22 and also going through the audit highlights. Okay, right. Next one, coming to the beautiful definition over there of the independent director. Who is this fellow? Right, so independent director, right? A big definition over there regarding the independent director. Okay, right. So again, so you have section 149 of the Companies Act, which also talks about the independent director, and here in SEBI LODR also there is a mention regarding the independent director, right? So independent director, number one, he should be a non-executive director other than a nominee director of the listed entity. So like opening requirement that he should be a non-executive director other than a nominee director of the listed entity. And now 1 2 3 4 5 6 7, right, coming to all the, right, 7 8, all the 8 points regarding who would be an independent director, right? One, what does it say? He is a person, in the opinion of the board of directors, a person of integrity and possesses the relevant expertise and experience, right? So one, he is a person of integrity and possesses the relevant expertise and experience, right? So person of integrity. Next one, who is or was not related to the promoter of the LHSA. What is LHSA? Listed company, listed entity, holding subsidiary, associate, or members of the promoter group of the listed entity. So who is or was not related to the, is not a promoter of the LHSA, who is not related, who is or who was not a promoter of the LHSA. Next one, who is or not related to the promoters or the directors of the LHSA. So who is not a promoter and who is not related to the promoters. So he is a person of integrity. He is no, who is or was not a promoter of the LHSA, who is not a related to the promoters or directors of the LHSA. Then, apart from receiving the director's remuneration, has no material pecuniary relationship again with the LHSA, right? The listed entity, holding subsidiary, associate, or their PD, that is promoters or directors. So here you have LHSA and PD, right? LHSA or their promoters or directors during the 3 immediately preceding financial years or during the current financial year. So that's the change. You know, earlier it was over here 2. Immediately preceding 2 financial years. Now it says during the 3 immediately preceding financial years or during the current financial year, right? So what are we studying over here? The definition of the independent director. One, he has to be a non-executive director other than the nominee director. Then he is a person of integrity, who is or not a promoter of the LHSA, who is not related to the promoters of the LHSA, who does not have any pecuniary relationship, right, with the LHSA or the PD, right? Pecuniary relationship with the LHSA or the PD during the 3 immediately preceding financial years or during the current financial year. Next one, none of his relatives. Okay, so now these are the restrictions on the relatives. Now, before we look into these restrictions on the relatives over here, we can quickly look into, section 141 subsection 3 of the company law, right? 141 subsection 3, it is regarding the disqualifications of the company auditor. In that we have 141 3D. Right, 141 3D, over there we have the 141 3D1, 3D2 and the 3D3. What is 141 3D1? Holds any security of or interest in. Right, a person shall not be eligible for appointment as an auditor of a company if he holds, any person, partner, relative holds any security or interest. However, relative can hold security up to the face value of rupees 1 lakh only in the company, and if relative exceeds the limit, corrective action can be taken within 60 days. Okay, right? Then indebted for an amount exceeding rupees 5 lakh, person, partner, relative, or has given guarantee exceeding rupees 1 lakh, right? Person, partner, relative. This is what we study in 141 3D for the auditor, that you are disqualified to be appointed as an auditor of a company if holding security interest, indebtedness, or the guarantee. Now, what does it say? You're disqualified from becoming an independent director of a company if your relatives, we'll come to you later, neither himself nor his relatives, but now only talking about the relatives, is holding any security of or interest in LHSA and a listed entity, holding subsidiary, associate during the 3 immediately preceding financial year or during the current financial year of face value in excess of 50 lakh or 2% of the paid up capital of the LHSA or such higher sum as may be specified, right? So holding any security of or interest in the LHSA during the LHSA during the immediately preceding 3 financial years or in the current financial year in excess of 50 lakh or such or 2% of the paid up capital or such some higher sum as may be specified. Okay, right. Then it's indebted to the listed entity, right? So indebted to the LHSA, right? Listed entity holding subsidiary associate or the PD in excess of such amount as may be specified, again same, during the 3 immediately preceding financial year or during the current financial year. And third one, has given a guarantee or provided any security in connection with the indebtedness of any third person to the LHSA, their PD, for such amount as may be specified during the same 3 immediately preceding financial year or during the current financial year, right? So are you getting? That's why did we correlate it with 141 3D 1, 2 and 3? Security, interest, indebtedness or the guarantee, right? Security, interest, indebtedness or the guarantee. Or what is the fourth one over there? Has had any other pecuniary, pecuniary is what? Monetary transaction or relationship with the LHSA amounting to 2% or more of its gross turnover or total income, right? So any other pecuniary relationship or transaction which exceeds 2% or more of its gross turnover of total income, right? Provided that the pecuniary relationship, so it says you cannot have any other pecuniary relationship which exceeds amounting to 2% or more, right? Provided that the pecuniary relationship or transaction with the LHSA or the PD shall not exceed 2% of the gross turnover or the total income or 50 lakh or such higher amount as may be specified from time to time. So up to 2%, what does it say? Or 50 lakh or such higher sum as may be specified, that would be allowed. Anything up to 2% it would be allowed. More than that you will not, you cannot be an independent director, right? You cannot be an independent director, right? So we are studying the definition of independent director. We said none of his relatives. Then now it says neither himself nor his relatives, right? So neither himself nor his relatives, right? Hold or has held, right? So right now not holding or has not held the position of the KMP, key managerial personnel, or has been an employee, right? So neither me nor my relative should have been the key managerial personnel or the employee of the LHSA or any company belonging to the promoter group of the listed entity, again in any of the 3 immediately preceding financial year in which he is proposed to be appointed, right? So say if I have to be appointed as an independent director in Infosys, say if I have to be appointed as an independent director in Infosys, neither me nor my relative should be holding any key managerial position or being an employee of the LHSA or any of the companies belonging to the promoter group during the immediately preceding 3 financial years. Okay, then all your relatives might get angry on you, you know, that I can't even be an employee of Infosys if you have to become an independent director over there, right? So now over there is just one exception created, provided that in case of a relative who is an employee other than KMP, the restriction under this clause will not apply for the employment, right? So even if my relative is working over there as an employee, can I still be an independent director? Yes. But if my relative is working as a key managerial personnel, then I cannot be an independent director. So for relative, little bit of the exception. If he is an employee, I can still be an independent director of that company. Okay, so neither by himself nor through his relatives. What does it say? Holds any position as a KMP or an employee. But employee can, what you say, relative can hold the position as an employee. Then next one is been or has been an employee proprietor partner, right? So that means if I have to be appointed as a director in Infosys, right? Neither me nor my relatives, if I have to be appointed as an independent director in Infosys, neither me nor my relative should have been the employee partner proprietor of the stat audit firm, company secretary firm, or the cost audit firm of the LHSA. Right? So neither me nor my relative should have been the employee, partner or proprietor of the stat audit firm, the company secretary firm or the cost accountancy firm of the LHSA. So like just creating an example over there, that say Infosys is being audited by PwC and I am a partner in PwC. Can I be an independent director in Infosys? No. Right? Or say company secretary work is done by some CS and company LLP. Right? So can I be appointed, and I am a partner in that LLP, can I be appointed as an independent director in Infosys? No, I cannot be an independent director. Right. What does it say? Should not be an employee, partner, proprietor in any of the three preceding here of the company, of the firm of auditor, company secretary, or the cost auditor of the listed entity or the holding subsidiary associate, or any legal or consulting firm. But there they have given some permission over there. Has had any transaction with the LHSA amounting to 10% or more of the gross turnover of such firm. So up to 10% of the receipts are coming from that Infosys for that legal consulting firm, and I am employee, partner, proprietor, or my relative, up to 10% is allowed. More than 10%, again it says you cannot be an independent director. C condition, neither by himself nor through his relatives holds 2% or more of the total voting power of the listed entity, right? So there is a case study also asked in the exam on this one. Like, for being an independent director, you cannot be holding more than 2% of the voting power of the listed entity. Right. Then what does it say? Neither by himself nor through his relative is the chief executive or director, by whatever name called, of any non-profit organization whose more than 25% receipts are coming from listed entity, promoter, director, or the holding subsidiary associate, or that holds 2% or more of the total voting power. Right. So say if I am a chief executive of a non-profit organization, and this non-profit organization ka more than 25% receipts are coming from Infosys, it says I cannot be an independent director of Infosys, right? And neither by himself nor through his relative is the material supplier, service provider, customer, lessor, or lessee of the listed entity. So when you read all of this, you think, oh my God, independent director, we'll have to get him from another planet only, like, from Mars or Jupiter or something. Okay, right. So neither by himself nor through his relatives. What does it say? Has been an employee or a KMP, has been an employee, partner, proprietor of the 5 firms, or is holding more than 2% of the voting power, or is the chief executive director of any non-profit organization, or is a material service provider, supplier, or so. Right. Then who is not less than 21 years of the age. And the last one, who is not a non-independent director of another company on the board, of which any non-independent director of the listed entity is an independent director. What does this mean? Right, so this is a listed entity and this is some another company. Right, this is some another company. Right, one of the non-independent director, that is, other than independent director, non-independent director of this listed entity is an independent director in some another company. Okay, and in this another company, I am a non-independent director. Right, so say listed entity is Infosys, example. Okay, and say another company is, say, some A Limited. Right, so one of the non-independent director of Infosys is an independent director in A Limited, just an example. And in this A Limited, I am a non-independent director. In which company I am a non-independent director? Where one of the non-independent director of the listed entity is an independent director. Now what does it say? I cannot be an independent director of Infosys. Right? Why I cannot be an independent director? Because I am a non-independent director in such a company where one of the non-independent director of the listed entity is an independent director. Right? What I have said is absolutely correct. Maybe if you're not able to capsulate what I'm saying, you can read it once or twice again. But this is 100% of what is written over there. Are you getting that? Non-independent director of the listed entity is an independent director in other company. And in that company, if I am a non-independent director, I cannot be an independent director of the listed entity. Why? Because it's like accustomed to act, and like you could be controlled. Right, by that director over there. That is why it says you cannot be an independent director. Right, so such wonderful is the definition of the independent director. Right, so what are the points over there? One, person of integrity, not a promoter, not related to the promoters. Then what does it say? Does not have any pecuniary relationship. Then none of his relatives. Then after that, neither by himself nor through his relatives. Then age is not less than 21 years, and who is not a non-independent director of another company on the board, on which any non-independent director of the listed entity is an independent director. Wonderful. Right, so now let's move on to the next amendment over there. Right, what is the next amendment over there? It says if there is a resignation or a removal of any director of the company, right, and so there is a vacancy, right, in the office of the director of the company, right, this vacancy is required to be filled within 3 months. Right, earlier what the wordings were there? Immediate next board meeting or 3 months, whichever is later. Now it says deletion of the word immediate next board board meeting or whichever is later, and simply it says any vacancy is required to be filled within not later than 3 months, at the earliest but not later than 3 months, right? So that next board meeting or 3 months, whichever is later, that has been deleted away, right? So what does it say? Like, let's take an example. A company has 20 directors, like 20 directors, and say it needs to have at least 1/2 independent directors, right? So right now the company is having 10 independent directors. Out of them, one of them resigned, right? So now how many directors are there in the company? As of now, 9 independent directors, and total also 19. But if I round it 19 to, what you say, minimum 50%, 1/2 independent directors, so they need to have minimum 10 independent directors. So now this vacancy due to resignation or removal shall be filled at the earliest but not later than 3 months, at the earliest but not later than 3 months. Okay, but let's look at a situation. A company has 20 directors, right? Out of that, 15 are independent directors. Just I'm taking an example. Okay, 15 are independent, right? There should be how many minimum independent directors? 1/2, right? So 10 independent director. In this company, how many are there? 15 are independent director. One of them resigned. So now how many independent directors are still there? 14 independent directors out of the total 19 independent directors. So even without filling the vacancy, is the company complying with the requirement of independent director? In situation 2, even without filling the vacancy, is the company complying with the requirement of independent director? Yeah, then it says there is no need for you to appoint a director within 3 months. Then there is no need for you to appoint a new independent director within 3 months. Okay, but in situation 1, yeah, we are falling below the limit of 50% independent director. So there the new independent director has to be appointed within 3 months. So whenever there is a vacancy due to resignation or removal of the director, by when is that vacancy required to be filled? That vacancy has to be filled within 3 months. Is that clear to everyone? Right, that vacancy has to be filled within 3 months. Okay, right, so we've looked into the definition of the independent director, and then the vacancy has to be filled within 3 months. Okay, next amendment over there is regarding the constitution of the nomination and remuneration committee, right? So next amendment over there is regarding the constitution of the NRC, right? The nomination and the remuneration committee, right? So nomination remuneration committee, what does it say? Minimum 3 directors, right? Nomination remuneration committee, minimum 3 directors. It said earlier at least one should be the independent director. At least one should be the independent director. And if the company is having the outstanding superior right equity shares, then at least 2/3 shall be the independent directors. Now what they have done, they've removed this requirement of, if it is having outstanding superior right, then 2/3 equity share, 2/3 independent directors. Now it says always at least 2/3 shall be independent directors. Now what does it say? Always at least 2/3 shall be the independent directors, right? At least 2/3 shall be the independent directors, right? So not that minimum 1 director, and if it is having outstanding superior right, then 2/3. Whether you have superior right or you don't have superior right equity share, what does it say? Nomination remuneration committee, minimum 3 directors, 2/3 shall be the independent directors. Chairperson of the committee has to be an independent director, and all members of the committee shall be the non-executive directors. All members of the committee shall be the non-executive directors. So do you get that amendment over there? Right? What is the point over there? Board of directors of every listed company shall constitute the NRC, which shall comprise of at least 3 directors, all of whom shall be non-executive directors, and at least 2/3 shall be the independent director. So deletion of the condition. What in case of listed entity having outstanding superior right equity share, 2/3 of the members shall comprise of independent directors. It says this point has been deleted, and chairperson of the committee has to be an independent director. So that condition still exists, right? The chairperson of the committee has to be an independent director. Are you getting that? Right? The NRC, the nomination and the remuneration committee, minimum 3 directors, 2/3 all shall be non-executive, and 2/3 shall be the independent directors, right? So that condition of outstanding superior right has been taken away, right? That condition of the outstanding superior right has been taken away. Okay, right? Then if we look into this nomination remuneration committee, right? Yes, if we look into this right? Nomination Remuneration Committee over here, right? What does it also is? Meeting, we know, at least once in a year, right? The meetings are at least once in a year, right? We also have the role of the Nomination and Remuneration Committee, right? We also have the point regarding the role of the Nomination and the Remuneration Committee. So in that role of Nomination Remuneration Committee, they've added 1.1a over there, right? They've added 1.1a, right? So 1, 2, 3, 4, 5, 6 were always there. What have been added over there is the 1a has been added over there in the role of the Nomination Remuneration Committee, right? Which committee are we talking about? We are talking about the Nomination and the Remuneration. So whose nomination? They are talking about nominating who can be appointed as a director or a manager of the company, and also what remuneration is to be paid to them, and also what remuneration is to be paid to them, right? So first, who can be appointed as a director of the company? They have to formulate the criteria for determining the qualification, positive attributes, and independence of a director, and recommend to the board a policy relating to the remuneration of the directors, the KMP, and the other employees, right? So who can be appointed, and once you appoint him, what remuneration to be paid to him? This formulation of criteria could be done by the NRC, right? Then what does it say? For every appointment of an independent director, I told you, independent director we'll have to find from another solar system planets only, right? So for every appointment of an independent director, first they will identify, okay, what type of an independent director will be suitable for our company. The Nomination Remuneration Committee shall evaluate the balance of skill, knowledge, and experience on the board, and on the basis of such evaluation, prepare a description of the roles and capabilities required of an independent director. So they will evaluate the existing board of the company and accordingly prepare a description of the capabilities, the role and capabilities required of an independent director. Okay, what type of an independent director does our company require? They will prepare a description. Then the person recommended to the board or for appointment as an independent director, so then they will recommend a person to the board, shall have the capabilities which have been identified in the description. So now whichever person you recommend to the board, he shall be having other capabilities which have been identified in the description. And now where to search such a person who is having such capabilities? Where to how to identify such a person? It says you can use the services of the external agencies, right? So nowadays the big fours, they also provide the CEO, CFO services, the appointment of those, right? So you can use the services of the external agencies if required. Also consider the candidates from a wide range of background, having due regard to their diversity, right? So out of the box, some altogether different individuals you can consider for the particular, for being appointed as an independent director. And also consider their time commitments of the candidate, because they might be like super busy people, right? So you need to consider that, yeah, very good independent director, but will he be able to give the time required to the company, right? So consider the time commitments of the candidates. Okay, right? So if you've been looking for the amendments or all these days, wanting to know what are the amendments, this is the change in the addition, not change, this is the addition in the role of the audit committee. So first point always there, formulation of the criteria. Then what does it say? For appointment of an independent director, they will evaluate the board of the company, and on the basis of such evaluation, prepare a description of the roles and capabilities required. And based on that description, whosoever person they are appointing, they have to check whether he has the capabilities which have been identified in the description. And how to identify this person, right? The candidate, it says use the services of external agencies as required. Consider candidates from a wide range of backgrounds, and also consider the time commitments of the candidates. Okay, right. One, they will formulate the criteria for determining who can be a director of the company. And existing independent directors, they will also formulate the criteria for evaluation of the performance of the independent directors. Okay, are they doing good justice to their role? Right? So formulation of criteria who can be, and formulation of criteria who is already an independent director of the company. Then devising a policy on board diversity, right? So that you have people with different skill sets on the board. Then identifying persons who are qualified to become directors. So who next, right, would be the director of the company, and who may be appointed in a senior management in accordance with the criteria laid down, right? So who next could be the director of the company. Then also to extend or continue the term of appointment of the independent directors and recommend to the board all remuneration in whatever form payable to the senior management, right? So the NRC will make the recommendation to the board, right? So that's a question over there regarding the role of the NRC. The point number 1A has been newly added over there, right? So that's the amendment number 8. Then coming to the ninth one, what is the ninth one which we have over there? Risk management committee. Which listed entities are required to constitute a risk management committee? So earlier it only said the top 1000 listed entities based on the market capitalization. Now what has also been added over there is the high value debt listed entities. Even they are required to constitute a risk management committee, right? So which companies are required to constitute a risk management committee? It says the top 1000 listed entities based on market capitalization as well as the high value debt listed entity. What is a high value debt listed entity? Which is non-convertible debt securities of 500 crore and above is the high value debt listed entity, right? Non-convertible debt securities of 500 crore and above is a high value debt listed entity, right? So now also applicable to these high value debt listed entities are also required to constitute the risk management committee. Okay, right. As I told you in the beginning, you know, over here we are studying about these committees like the audit committee, right? The audit committee, then the SRC, the RMC and the NRC, right? What is so different about the RMC, the risk management committee? It says minimum 3 members and majority should be board members, right? Majority of the committee members shall be the board members. Other committees, what does it say? All committee members have to be board members only. But here for risk management committee, it says even the senior management could be the members of this committee, right? Even the senior management, they could be the members of this committee, right? So the board shall constitute a risk management committee, shall have minimum 3 members, right? So here it's say 3 members, not 3 directors, because here why? Even the senior executives of the company may be the members of this committee, with majority being board members, at least one being the independent director. And if the company is having outstanding superior right equity shares, then again at least 2/3 shall be the independent directors, right? So what is the constitution of the RMC? Minimum 3 members, majority should be board members. Other senior executives, they could also be the members of this committee. At least one independent director, at least one independent director. And if the company is having outstanding superior right equity shares, then at least 2/3 shall be the independent directors, right? Then at least 2/3. So generally at least one independent director, and if having superior right, then at least 2/3 shall be the independent directors, right? How many meetings in a year? At least twice in a year, right? So 2 times in a year with a time gap of not more than 180 days, right? Coming to the role of this committee, right? So that's again there in the RTP, the role of the risk management committee, right? Risk management committee, you know, like over a period of time, things have been evolving. Like, you know, initially when we started with accounting and in the context of company corporatization and all, they talked about accounting system and internal control system and ERP and all. They started talking about integration of the accounting system and internal control system. Then from internal control system with Companies Act 2013 and the Sarbanes-Oxley Act, the matter came to IFC and internal financial controls. In Sarbanes-Oxley, they call it as the ICOFR, the internal controls over the financial reporting. But there should be internal controls over the financial reporting. But now they are going one step beyond all of this, and it says now in an organization there should be a risk management policy, there should be a risk management framework, there should be a risk management process in an organization. Because when you do a business, there are such huge amount of risks which are there. So it says internal control, well, there has to be there. Internal financial control has to be there. But now go beyond that. There also has to be the risk management framework, the risk management policy in an organization. Right. So now when internal auditors, they also do the review of internal control system. They also check for the risk management, whether risk management is being properly done or not. Okay, right. So what is the role of the risk management committee? Obviously, first to formulate a risk management policy. What this policy should mention a framework for the identification of both, right, internal and the external risk specifically faced by the listed entity, in particular including the financial, operational, sectoral, sustainability, the ESG, information, cyber security risks, right? So this is again an MCQ for the exam, whether cyber security risks are also covered in the role of the risk management committee, yes, they are included. Right, even the cyber security risks are included, or any other risk as may be determined by the committee. Right, so one is there to formulate a detailed risk management policy, a framework for identifying all the risks. Once you identify the risk, now you need to mitigate. Right, so mitigating measures for risk mitigation, including systems and processes for internal control of the identified risk. Okay, how we could stop this from happening. Right, so mitigation, or what we could do if this happens. Right, so that's the mitigation. And obviously there was a worst situation, but still, we had mitigations in place. So even in that, our business could continue. So what are the BCP, the business continuity plans? Right, the business continuity plans. Right, so formulate a risk management policy, identification, a framework for the identification of the risk, then the mitigation, and then the business continuity plan. Right, then this risk management policy, what does it say? Whatever you formulated the risk management policy, accordingly now you need to have the methodology, processes and systems in place to monitor and evaluate the risks associated with the business of the company. So like continuously, you need to have the CCTV camera on time, right, to keep on checking what risks are coming to the company. Like, near the airport, you always have that tower over there which keeps on checking, which flight is coming from where. Right, so similarly over here in the company, there should be a methodology, processes and systems to monitor and evaluate the risks associated with the business of the company. Right, then whatever this risk management policy has been designed to monitor and oversee the implementation of the risk management policy. So it cannot only be on paper, there cannot only be design, there also has to be the implementation. Right, so the implementation of the risk management policy. Then it cannot happen that once upon a time, 40 years back, you decided a risk management policy and that same risk management policy is continuing. No. What does it say? Whatever is the risk management policy of the company, to review the risk management policy at least once in every 2 years. Right, so this is again an MCQ. Right, how frequently to review the risk management policy? At least once in every 2 years. How many times does the risk management committee meet? At least twice in a year. But how many times the risk management policy is to be reviewed? Once in 2 years, including by considering the changing industry dynamics and the evolving complexity. Then to keep, now again, whatever work is being done by the risk management committee, they have to keep informed the board of directors about the nature and content of the decisions, recommendations and the actions which they have decided to take. And in case, like, what we studied in the mandatory areas of review by audit committee, right, what was one of the point in the mandatory areas of review? The appointment, removal and terms of remuneration of the chief internal auditor. Right, in the mandatory areas of review by audit committee, what was one of the point over there? The appointment, removal and terms of remuneration of the chief internal auditor. So now for risk management committee, they have the appointment, removal and the terms of remuneration of the chief risk officer, if any. So now that it has to have a chief risk officer. If it has, then the appointment, removal and the terms of remuneration of the chief risk officer shall be subject to review by the risk management committee. And obviously this risk management committee cannot work in isolation. It has to coordinate its activities with other committees in instances where there is any overlap with activities of such committees as per the framework laid down by the board of directors. Right, so super important, no surprise if we see a question in the exams on this one regarding what is the role of the risk management committee. So one, which companies are listed entities are required to constitute the risk management committee? Top 1000 and also the high value debt listed entities. And apart from that, what is the role of the risk management committee? One, to have a risk management policy, framework, mitigation and the business continuity plan. Then it says to have the appropriate methodology, systems and processes in place. Right, the appropriate system, methodology and the processes in place. Right, then the implementation of the risk management policy. Then to review the risk management policy at least once in every 2 years. Right, then to keep the board of directors informed. Then also the appointment, removal and the terms of remuneration of the chief risk officer, and also coordinate its activities with the other committees. Right, and also coordinate its activities with the other committees. Okay, right, so super important for your exams, the discussion regarding the risk management committee. Okay, coming to the next amendment over there, the information to the shareholders. Right, so what information is required to be provided to the shareholders? Right, so what does it say? For that particular shareholder, you need need to check whether that shareholder, the email address, is it registered with the company or the email address is not registered with the listed entity, right? So email ID is registered with the listed entity or it is not registered with the listed entity. If it is registered with the listed entity, then the soft copy of the full annual report at least 21 days before the date of the meeting has to be sent to the shareholder, the soft copy of the full annual report. However, the email address is not registered. Then you need to check whether that shareholder has he requested for a full copy of the annual report. Has he requested specifically for a full copy, right, of the annual report, hard copy of the annual report, right, hard copy of the full annual report, right? I could put it this way: requested for the hard copy of the full annual report. If he has requested for a hard copy of the full annual report, yes, then the full copy, hard copy of the full annual report should be sent to him. Yeah, he has not requested for the hard copy of the full annual report, then only the hard copy of the salient features of the annual report, then only the hard copy of the salient features of the annual report is to be sent to the shareholder. Right, so if email address is registered, then by default you send the soft copy of the full annual report. And if email address is not registered and he has not requested for a hard copy of the full annual report, then you send the hard copy of the salient features. However, if requested for the full copy of the hard copy of the full annual report, then that is required to be sent. Okay, right, so listed entity shall send the annual report to in the following manner to the shareholders: soft copy of the full annual report to all those shareholders who've registered their email address either with the listed entity or with any depository. Number one, hard copy of the statement containing the salient features of all the documents as prescribed in section 136 or rules made thereunder to those shareholders who have not so registered. Not registered what? Their email address. Who have not registered their email address. And hard copies of the full annual report to those shareholders who requested for the same. Right? Hard copies of the full annual report to those shareholders who requested for the same, right? So that is what we have tabulated over here, 1, 2 and 3. Right, that is what we have tabulated over here, right? So soft copy of the full annual report if email address is registered, not registered, and if they've not requested for a full copy of the hard copy of the full annual report, then you send the salient features. And if they've requested for a hard copy of the full annual report, then that is required to be sent, right? Then that is required to be sent, right? So that is the yes, first one over there in the information to the shareholders, right? Obviously this has to be sent, the annual report has to be sent at least 21 days before the AGM, right? 21 days before the AGM. Then another information which is to be given to the shareholders, are you listening to me, right? Another information which is to be given to the shareholders is that all those directors who are to be appointed or reappointed, so in the case of an appointment of a new director or the reappointment of a director, the shareholders must be provided with the following information. So one, what information you have to give to the shareholders? You have to send the copy of the annual report to the shareholder. Second, all those directors who are to be appointed or reappointed, it says the following information regarding those directors is required to be sent to the shareholders. Information number one, a brief resume of the director, right? So whatever the CV, the details of that particular director, then why he is capable or he should be appointed as a director. So nature of expertise in the specific functional area, right? So which areas he is having a niche or he is having a good skill set, right? Then disclosure of relationship between the directors inter se. Okay, now this person who is to be appointed or reappointed, his father is also already a director in our company. So disclosure of relationship between the directors inter se, right? So brief resume of the directors, then the nature of expertise, then the disclosure of relationship between the directors inter se. Then other companies, name of listed entities in which the person also holds the directorship and the membership of committee of the board, along with the listed entities from which that person has resigned in the past 3 years, right? So other companies in which he is a director and the other companies in which he is a director and the membership of the committee, and apart from that the other companies which he has resigned in the last 3 years, right? So this is again important for the MCQ, right? So that is point number D. Then shareholding of the non-executive director in the listed entity, including the the shareholding as a beneficial owner, right? So very important, they make MCQs on anything based on these fine reading, right? So shareholding of the non-executive director, including the shareholding as a beneficial owner, right? Shareholding of the non-executive director. And in case of an independent director, the skills and capabilities required for the role and the manner in which the proposed person is capable meets the requirement, right? So independent director, what skills and capabilities are required, and how this person who you want to appoint or reappoint, how the proposed person meets such requirement, right? How the proposed person meets such requirement, right? So what information is required to be given to the shareholders regarding the directors who are to be appointed or reappointed? Point number one, a brief resume of the director. Second one, the nature of the expertise. Third one, the disclosure of relationship between the directors inter se. Fourth one, the other companies, right, where he is a director, right, the membership of the committees and those companies from where he is resigned as a director during the last 3 years, and also the shareholding of the non-executive director, including the shareholding as a beneficial owner, and in case of independent directors, the skills and capabilities required for the role and the manner in which the proposed person meets such requirement. Okay, the auditor should ascertain that from the communication sent, whether in case of appointment of a director or reappointment, the shareholders have been provided with the information stipulated above. So auditor needs to check whether the above information has been provided or not to the shareholders, right? So we have the role of the risk management committee, then the information which is to be given to the shareholders. Coming to the next one over there, which is regarding the related party disclosures, right? Coming to the next one over there, which is regarding the related party disclosures. Okay, so even before this amendment came, you know, lot of questions were recently coming in the exams regarding related parties and SEBI LODR, right? So more so now that you know, that legacy of asking questions from related parties in SEBI LODR would continue, right? So now let's look into the points over here. The listed entity shall submit a quarterly compliance report on corporate governance in the format specified by the board. Which board? The Securities Exchange Board. From time to time to the recognized stock exchange within 21 days from the end of the quarter. Right? So quarterly, yes, listed companies have to submit the corporate governance report in the format specified by the board to the recognized stock exchange within 21 days from the end of the quarter. Right? So this is again an MCQ which you have over there. And there is another question which comes, that this report on corporate governance is required, which is to be submitted to the stock exchanges within 21 days from the end of the quarter, is to be signed by the CEO and the CFO of the company, or it is to be signed by the CEO or the CFO of the company, or it is to be signed by the compliance officer or the chief executive officer of the listed entity, or the compliance officer and the chief executive officer of the listed entity, right? So what do you think, who should be signing this report on corporate governance, which is to be submitted to the stock exchanges within 21 days from the end of the quarter? Right, within 21 days from the end of the quarter, right? So if you have a look at the beginning of this chapter, right, so many students were also curious regarding, ma'am, if we could see a few pages of the 8th edition of the book. So I think even that purpose has been served over here, right? Anyways, right, the listed entity shall submit a quarterly compliance report on corporate governance in the format as specified by the board, right, to the recognized stock exchange within 21 days, and this report shall be signed either by the compliance officer or the chief executive officer of the listed entity, right? So if you write this answer on the basis of your general knowledge says that generally everything is CEO, CFO. So anyways, you will select anything out of A and B. You say, I have never heard of anybody called as compliance officer, so I don't know you. Okay, so the answer also doesn't know you, right? So anyways, A and B is not the option. Now you say, ma'am, somehow I remember there was some compliance officer over there and chief executive officer, but now who saw between those two, whether there was an or and an and over there, whether it was compliance officer or chief executive officer, or whether it is compliance officer and chief executive officer. Logically, mind says better if both sign. Now let compliance officer also sign, let chief executive officer also sign. Again, logic goes to hell. Again, logic does not serve the purpose over here, right? So the correct option over here would be the compliance officer or the chief executive officer of the listed entity. Anyways, let's proceed further, right? Let's proceed further, right? So that's the first point over here. Then the listed entity shall formulate a policy for determining the material related party transactions and on dealing with the related party transaction. So it says now listed entity, you have to determine a policy for determining the material related party transactions, right? So listed entity shall determine a policy, formulate a policy on the materiality of related party and also on dealing with these transactions. This policy should also include the clear threshold limits duly approved by the board of directors. Further, such policy shall be reviewed by the board of directors at least once in every 3 years and updated accordingly, right? Risk management policy had to be reviewed at least once in every risk management policy had to be reviewed at least once in every 2 years. Now here the related party materiality policy has to be reviewed by the board of directors at least once in every 3 years and updated accordingly, right? So it says they will formulate a criteria for determining material related party transaction. This policy will also include the threshold limits. Then also it says the policy shall be reviewed at least once in every 3 years and a related party transaction shall be considered to be material if the transaction to be entered into individually or taken together with the previous transactions during a financial year exceeds 1000 crore rupees or 10% of the ACT. What is ACT? The annual consolidated turnover of the listed entity as per the last audited financial statements of the listed entity, whichever is lower, right? So 1000 crore or 10% of the annual consolidated turnover of the listed entity, whichever is lower. That is how they have defined the materiality of the related party transaction, right? 1000 crore or 10% of the annual consolidated turnover of the listed entity as per the last audited financial statements of the listed entity, whichever is lower. Okay, right? So point number one, they should be having a policy. Then after that, the board should clearly lay down the threshold limits. Then this policy shall be reviewed at least once in every 3 years. Then what does it say? A transaction, related party transaction, shall be considered to be material if it exceeds 1000 crore or 10% of the ACT, whichever is lower, right? That is point number 4. Then next point over there, all related party transactions and subsequent material modification shall require the prior approval of the independent directors in the audit committee of the listed entity. So all related party transaction and the material modification shall require the approval of the audit committee. But in the audit committee, who can approve? Only the independent directors of the audit committee. Super important, 5-star, right? Only the independent directors of the audit committee can approve the related party transactions. Are you getting that? What was the constitution of the audit committee? Minimum 3 directors. Then what did we say? At least two-thirds shall be the independent directors. If it is having outstanding superior right, then all shall be the independent directors. So can there be two-third independent also? Yes. And can there be all independent directors also? Yes. And who out of the audit committee can approve the related party transaction? Only the independent directors. Who out of the audit committee can approve the related party transaction and any subsequent material modification? Only the independent directors of the audit committee and prior approval of the independent directors, right? Not later, prior approval. Then it says in some cases the audit committee may grant the omnibus approval for the related party transactions, right, proposed to be entered. So it says generally what is required is the prior approval of the independent directors. Sometimes they could also give the omnibus approval. Then the listed entity shall submit to the stock exchanges. So now it says, earlier also we had studied over here that the corporate governance report is to be submitted, right? The quarterly compliance report on corporate governance. Now it says the listed entity shall submit to the stock exchanges disclosure of related party transaction in the format as specified by the board, that is again the SEBI, from time to time, and also publish the same on its website, right? So related party disclosures, one, they have to be what is submitted to the stock exchanges, and they are also to be given on the website, right? The related party transaction in the format specified by the board. The disclosures are to be given to the stock exchanges and also to be published on the website. High value debt listed entity, when non-convertible debt securities are 500 crore and more, shall submit these disclosures on a half-yearly basis. So rather than on a quarterly basis, for HVDL, what is the relaxation over here? Rather than on a quarterly compliance report, for them HVDL, what does it say? Half yearly basis. For HVDL, high value, right? So high value, it says half year. right? Half year, right? Standalone financial results for the half year, right? Then provided further that the listed entity shall make disclosures every 6 months, right? So again, the listed entity, these are what is to be submitted to the stock exchanges, and they have to be submitted to the stock exchanges. High value debt listed entity has to submit them on the basis of the SFT. What is SFT? The standalone financial results for the half year. For high value debt listed entity, such disclosures are to be given on the basis of the standalone financial results, and that too only for the half year. And then what does it say? For a listed entity, such disclosures shall be made. Such disclosures shall be made every 6 months within 15 days from the date of publication of the standalone and consolidated financial results, right? Within 15 days, from every 6 months within 15 days from the date of publication of standalone and consolidated financial results. So say example, right, the standalone and consolidated financial results example have been published on 30th of June. So from 30th of June within 15 days, right? So every 6 months within 15 days from the date of publication of the standalone and consolidated financial results, right? Every 6 months within 15 days. And what is the further change which is coming over there? Provided that further that the listed entity shall make such disclosures every 6 months on the date of publication of the standalone and consolidated financial results with effect from 1st April 2023, right? So right now, what does it say? Every 6 months within 15 days. Every 6 months within 15 days from the date of publication. From 1st April 2023, what does it say? Every 6 months on the date of publication. So 30th June ko published, 30th June ko the details have to be submitted. What does it say? On the date of publication of the standalone and consolidated financial result, right? So right now, what does it say? Every 6 months within 15 days from the date of publication of the standalone and consolidated financial results. However, with effect from 1st April 2023, what does it say? Every 6 months on the date of publication of the standalone and consolidated financial results. Okay, right? So is it okay for all of you? Related party, what are the disclosures required to be given? One, it says the quarterly compliance report to be submitted to the stock exchanges in the format specified by the board within 21 days from the end of the quarter. Then the listed entity shall have a formulate a policy for determining the material related party transaction. It shall clearly lay down the threshold limits. This policy has to be reviewed at least once in every 3 years. And what is a material related party transaction? 1000 crore or 10% of the annual consolidated turnover, whichever is lower. Then all related party transactions and material modification shall be getting the prior approval of the independent directors of the audit committee. In some cases, the audit committee may grant the omnibus approval, right? Then what does it say? The details have to be submitted to the stock exchanges in the format specified by the board, and also they have to be published on the website. For HVDL, they have to be given on the basis of standalone financial results for the half year. And then what does it say? Every 6 months within 15 days from the date of publication, and from 1st April 2023, every 6 months on the date of publication of the standalone and consolidated financial results. Okay, right? So if we look into these points over here, right? So the SEBI LODR, right? The changes which have come over there regarding the related party disclosures, right? The related party disclosures, transaction, right? So there are a lot of detailed points over there, right? So one, as we said, they should formulate a policy. Then that should clearly lay down the threshold limits. Then this policy shall be reviewed at least once in every 3 years. What is material which exceeds 1000 crore or 10% of the ACT, whichever is lower. When it comes to brand usage, then it says if it exceeds 5% of the ACT, then it would be considered to be material, right? So that's an additional information, but not included in your RTP, or maybe as not given over there, right? Then audit committee approval. What does it say? All related party transactions and subsequent material modification shall require the prior approval of the audit committee. Only those members of the audit committee who are independent directors shall approve. And then these are all the conditions for the approval. Then it says for certain transactions, the audit committee may grant the omnibus approval, right? Omnibus approval in case of certain related party transaction. It shall specify, again, it should not be for an amount exceeding 1 crore, not for a period of more than 1 year, right? Then again, the prior approval, then these provisions are not applicable for transactions between two government companies and so. And then also the high value debt listed entities, and the disclosures every 6 months within 15 days and every 6 months on the date of publication, right? So those those are the amendments which are there over there regarding the related party disclosures. And then last part over there which says about the schedule 5, the annual report shall contain the following additional disclosures relating to related party, right? So additional disclosures regarding the related party to be given in the annual report. The listed entity which has listed its non-convertible securities, right, shall make such disclosures in compliance with the AS, right, as per the AS 18 or the Ind AS 24, and the disclosure requirement shall be as follows, right? So what disclosures are to be given for related party transaction? In the books of account of the holding company, in the books of account of the subsidiary company, and again one more point for the holding company, right? What disclosures are to be given? Loans and advances in the nature of loan. Again, loans and advances in the nature of loans, loans and advances in the nature of loan, because there are some advances given, though it looks like an advance, eventually it's a loan only. So what does it say? This loans and advances in the nature of loan given to subsidiaries by name and amount, to associates by name and amount, and to firms and companies in which directors are interested, again by name and amount, right? So loans and advances in the nature of the loans given to the subsidiaries, given to the associates, right, given to the subsidiaries, given to the associates, and given to firms and companies in which directors are interested by name and amount, right, in which directors are interested. In all the cases, what you have to give? Name and amount. In subsidiary company books also same disclosures as applicable to parent company have to be given in the accounts of subsidiary company also. And investments by the loanee in the shares of the parent company, right? So if any investments have been made by the loanee in the shares of the parent company, the person who's given the loan, and the subsidiary company where the company has made a loan or advance in the nature of the loan, right? So any loans which have been given, right? The disclosure is the disclosures director's interest will have the same meaning as under company law. These disclosures are to be given, when does it say? When 10% or more of the shareholding in the listed entity. Disclosures of transactions of the listed entity with any person or entity belonging to promoter group which holds 10% or more of the shareholding of the listed entity in the format of the relevant accounting standard for the annual results, right? So again, very important over here is 10% or more of the shareholding. And another important one from the viewpoint of MCQ, that the above disclosure shall not be applicable to the listed banks, right? So listed banks also SEBI LOD are applicable, but these disclosures regarding loans and all are not applicable to the listed banks. So SEBI LODR would be applicable, but these disclosures would not be applicable, right? So that's about the amendments which are there, specifically restricting our our discussion to the amendments, right? So related party disclosures in the annual report, right? So it's the same ones which are there in the audit highlights. We've also seen it in the RTP number 22, right? And I hope that your preparation is full on going on for the upcoming exams, right? That you have studied entirely all the chapters. You're not only looking into standard, ethics and caro, but you're also looking into the chapter like bank audit, NBFC, insurance, peer review, quality review, automated environment. And not that you're only covering all the chapters and covering the entire syllabus. You're also doing the writing practice regarding how the answers are required to be written in the exam. What should be the format for writing an ethics answer, for writing a caro answer, for writing a tax audit answer, or any standard on auditing answer? Do I have some general content or a format for writing the answers? And apart from that, do I also have a skill set for solving the MCQs? So I mentioned three things over here. Which three things I mentioned over here? One, the coverage of the syllabus, right? That you're not doing this and not doing that. It's not this or that. It is this and that. You cannot say I'm doing this, I'm not doing that. I'm doing this and I'm also doing that also. That, but then another one, you have to be knowing the writing of the answers, your presentation, time management, all of that to be taken care of. Many a times with students, it so happens, they say we know, okay, these are the content, these are the concepts and all, but we don't know in exam when question is asked what is required to be written. Right? So you should be having that interlinking skills also, right? That association skills also, and very important, we can't ignore the MCQ part of the paper. Yes, so we also need to have we cannot take it for granted also. We need to have the appropriate skill set, right? So if you've heard me so far, thank you so much for your patient listening, and I wish you all the very best for your exams. Thank you so much.